We are back now, and after higher interest rates and lower buyer demand stalled out the housing market the past few years, some economists believe that big changes could be coming in 2026. Joining us with more is 9 News real estate expert Lane Lyon. He's a realtor and managing broker at Coldwell Banker. Lane, good morning.
Hey, Jordan, good morning. Thanks for having me on.
Thank you for being here.
Yeah.
Okay, so we're already looking at next year. Some forecasters say that they see a shift coming. What's behind it?
Well, that's exactly right. It's optimism out there, and it's coming from within the real estate industry to begin with. In fact, the chief economist for the National Association of Realtors, Lawrence Yun, recently came out with some numbers, and a lot of us were intrigued by taking a look at them. I brought them here for you today. Lawrence Yun says that as we go into 2026, we could see some positive signs with home sales across the country going up 14% and home values also going up as well, as much as 4% next year, which is nice. It's a lot being driven by job growth. We could see as many as 1.3 million new jobs coming into the marketplace, and also mortgage rates, the all-important interest rates, being right about 6%. So this is one economist here thinking very favorably. On the lending side, Fannie Mae also seeing some positive gains, not quite as optimistic, with home sales more like 7% and home prices up about 1%. So there is a little bit of a debate of how much better we should see things next year, but I think it's a good sign that we're trending in the right direction.
Well, that's great news for the sellers. What about the buyers on the affordability side? Any relief for them?
Well, yes. In fact, we continue to see mortgage rates go downward, which is good. Nothing like those 3% mortgage rates that we saw during COVID, right? But even coming from 6.7%, Jordan, to 6% as forecast, that is going to provide some affordability. We are seeing some good signs when it comes to things like mortgage applications. I'm hearing from lenders who are saying, I'm hearing from a lot of buyers who want to buy next year, perhaps coming off the sidelines, and builders are also answering the call with more affordable options, great interest rates, incentives to buy. I anticipate that to continue as well as we go into the new year.
All right, I want to add some context to a report that many people saw recently.
Okay.
A lot of eyebrows were raised when they saw that 90% of Denver home values have gone down. Can you provide some context around all of that?
At first, it kind of stops you in the tracks, right? And you're like, what's going on here in Denver? And I think that context is important here. Of course, the report coming out from Zillow, a great resource really for data for consumers. But I think as you look a little deeper into the article, you'll see that that's based on changes to their Zestimate year over year. And Zestimates pull from a variety of places, including places like property tax assessments, which people saw go down their taxes this last year, which is a good sign. It takes a lot of variables in, and the accuracy of Zestimates, even according to Zillow, when you go to their website, will vary based on the neighborhood. So I wouldn't put too much alarm or panic into that news, because we tend to think that the housing market is only good when it's benefiting sellers. We saw a strong buyer's market this year, and I'd be willing to bet, Jordan, that 90% of them still feel like Denver's pretty expensive.
Sure, 100%.
So we're not seeing foreclosures, we're not seeing a high rate of short sales, and I think those are good signs that we have equity and we're okay.
Yeah, it's all relative, right?
Yeah, it is, and I think we've got some good things going into the new year. Stay tuned.
All right, Lane, thank you so much.
You
we
got
appreciate it. Let's get